can you talk about different volume profile shapes and what they suggest for market trends intraday and next day, normal distribution, P-shaped, L-shaped, double humps, and so on. We'll talk about this for a little bit. So there are different profile shapes. Let me clean this chart up for you so we can see a little bit. So these are all profiles, and profiles come in many shapes, kind of like human beings, right? But the shapes have a meaning. Give us an indication of what's going on. For example, this profile here shows high volume node, low volume, high volume, low volume, high volume, low volume, high volume, low volume. This is a trend day profile. This is a profile that's saying, hey, I cannot find consensus. And the market's purpose, the market's greatest and sole purpose really is to find consensus. It's not to screw you out of your money. It's not to run your stops. That's all nonsense. Please don't believe that. That's just victim thinking. No offense to anybody. But the market's here to find equilibrium. Okay? It's just like eBay and other markets. It's there to bring as many participants together and trade as much as possible. So in general, the markets want to form equilibrium. Where's my pen here? Okay, so my Epic pen is disappeared. Okay, let me grab it. Okay, here we go. So see if I can draw. There we go. All right, so with this being, so I'm gonna just mark this. So here's a profile that that essentially opened up, tested, made a fat part in the middle, and had an excess. This is balanced. This is a market that day, last Monday, not this past Monday, but a week ago. This profile is essentially saying that the market's resting. Where is it resting? It's resting in the area of the lower distribution of the prior day. The next day, we open below, we open down here, and we move right into equilibrium. And what do? We form the highest volume node right on top. So what we have here is 2 days of complete equilibrium. And so the one market is balance, the next day is trend, and the indication of what shape it is, there are P shapes, there are just normal distributions, there's a B shape. All of these have different meanings. And what I would do is do a search online for market profile, and there are plenty of resources that explain what that indicates. For me, I don't look at the shape by itself. I think that's a mistake, just like looking at a bar by itself. What you want to look at is how that shape was formed. For example, and I'll make this very, very brief because I'm out of time. For example, if a market trades a while in balance, chop, terrible market, and then rips up and then closes, what this profile will look like is something like this. It'll look like a B-shaped profile because a lot of volume occurred. I drew that too high, more like this. And then you might have a little nubbin at the top on the close because a lot of volume goes off. See, but this is not a B-shaped. This B shape means long liquidation. But if the market opened and immediately drove down to an excess price and then went sideways, which also forms a B shape, this tells a completely different story. This is long liquidation. This is a long squeeze. The market is really intent on moving lower and has found equilibrium through the volume profile, through the volume that it traded at the low. It found equilibrium at a lower price. This is a market that was in equilibrium and shot up. So don't be the kind of trader or consumer that just kind of believes whatever's in a book. You need to look at how it was formed and put it back into context.
If you found this volume profiling concept useful, then you'll really enjoy our full webinar, Key Components for Setups and Volume Profiling, available right here on your screen.